What's up, everybody? Alexander, the day trading champ. Today we got the market opening in about 1 hour, so I got to get this video out soon for you guys. Okay, what I have is a trading strategy for Domino's Pizza today, and a hypothesis and a conclusion on how we can make some money on this thing. Okay, so with that being said, make sure you stick around the whole way through. That way you can profit off of this trade today, hopefully. All right, so first thing I need to point out, okay, because a lot of people think that when you beat earnings that you just continue higher forever and ever. Okay, that's not the case. You can see here the last 4 times Domino's Pizza has reported earnings, right? It's beat every single time, and you're going to see why this is important in the charts coming here shortly. Okay, so back in July 16, 2020, you can see we beat earnings, all right, and then what happens? We bounce up and drop for the rest of the day. Okay, so that's the first example of beating earnings, but the stock still drops after, okay? Second example, you see here in April 23rd, 2020, we beat earnings, okay? And what happens? The stock drops, okay? So a lot of people, this might be very new to you, but just because you beat earnings does not mean you're going to go higher, okay? So then, next example, we actually completely destroy the earnings, all right? So what does this look similar to, guys? I don't know if you've been around on the channel or seen how we went over Zoom and its earnings sets. This looks exactly like Zoom. It's even around that 300 level that they were both at, and then they both surge up, okay? So this is going to be one of those special scenarios where you completely destroy the earnings, but much like Zoom, guess what happens shortly after the resulting weeks? It gets absolutely smashed, okay? Back, fills the gap, comes back down to reality, okay? So you're seeing that in 3 out of 3 cases so far, it didn't matter how good those earnings were, all right, the stock still goes down after, all right? So fourth example, Domino's Pizza beats earnings, okay? And this was back in 2019, October 8th. Okay, so pretty much you can see that we gap lower, right? This is the open, and then this is the close. So this is the one example, guys, where you actually end up higher for the continued days, okay? Because after this chart, I didn't get this chart for you guys, but after this green day, after the earnings, the Domino's actually does continue up steadily and slowly, okay? So this is going to be the one example in the last year where Domino's Pizza actually, holds its gains. Okay, but look at this. Take this into consideration, guys. Domino's Pizza was already beat up very strongly, and there wasn't much downside here in the first place. Okay, today though, what we have here on Domino's Pizza is the very opposite. We're at our all-time highs with limited upside potential, and we just missed on earnings, okay? So this brings me to my trading conclusion, all right? So you can see 4 out of 4 times, guys, we've beat the Domino's Pizza earnings, all right? But even when we beat it, the earnings, the stock is still dropping, okay? So the hypothesis for today, guys, is that if you haven't seen, guys, today we missed the earnings for the first time, all right? And what happens today? We gap lower. So in October 8th of 2020, we beat earnings, right? Which is this example here. We gapped lower and then ended higher for the day, but that was on good earnings. We ended up actually being able to recover from the gap down. All right, so today we gap down, but we actually miss earnings. So what are the chances that we're actually able to recover and sustain or get back those losses? The fact is that we're not going to be able to, or at least that's not a fact. Actually, that's not a fact. I shouldn't say it's a fact, but the probability of us being able to regain those losses is much lower. Why? Because we're at our all-time highs, and on top of that, we actually missed the earnings, right? So the reason we're able to recover these losses here on the gap down is because we beat the earnings, okay? But this time we actually missed the earnings and we gap down, so it's a disaster, okay? So the probability for us to actually continue lower is much higher, which brings us into our trading strategy, guys. Short any decent bounce on the stock, okay, because it's going to have a high probability that the move is going to continue lower, as we've shown in the charts above. All right, you can see here that, well, actually, I guess I didn't show you, but at least in this one chart, okay, I didn't show the before and after for all these charts, but you can see in the one chart I did show after the thing got beat up for weeks, okay, but just trust me on this. A lot of times these earnings plays, they're going to drop for multiple days, okay? So you have the decision whether you want to go with today expiration I believe that's what we have today. Is today expiration contracts? Yeah, or 1 day out. So Friday expiration, or you can go with next week expiration and play it for a further move to the downside, considering that we're at our all-time highs with a lot more room to move lower. Okay, so short any decent bounce. Why? Because it's going to have a high probability, and the fact that we miss earnings too, on top of and the fact that we're already gapped down, just shows that we got a lot more room lower, even though it's already got beat up about like 40 points, guys. Okay, so here you can see the chart if you haven't seen it yet. All right, we gapped down about 30 points here, and you're going to want to short any bounce. Why? Because we've shown you how the one time where it actually did gap down, it recovered, but it beat earnings. Today we gapped down and we have not beat earnings. We actually missed it, so chances to regain are much lower. So alright, so guys, what I will say about this, guys, is that this is not a statistical probability that I'm giving you. Alright, this is more of an inference and a conclusion based off of what I see in the charts from the past and recent history, okay? So you can see almost every time that we do drop lower, besides that one instance where it actually was able to recover its losses after it beat earnings, okay? So taking all this into consideration, my hypothesis, my conclusion would be that we will continue lower, and that's how I'm going to trade it most likely unless things change. Okay, so um, understand that this is not a statistical probability, like I said, but to me it makes sense. Make sure it makes sense to you before you trade it or anything. Okay, so that's our plan for the day. So here's my actual strike plan. Okay, so if we bounce up to 420, I'll be getting 415s, 410s. All right, I'll be stair stepping in, buying multiple strikes there. All right, so any bounce, you have a high probability for a downturn. All right, and if you start to see this thing shoot and completely recover the gap, then the trade would probably be over and you'll probably want to get out. All right, so with that being said, that's how we're going to trade it today. Hopefully you enjoyed this little breakdown of the previous earnings plays and the seasons for Domino's Pizza. So guys, if you enjoy the breakdown, the short but to the point video, make sure you're subscribed, you drop a like if you enjoyed the video, and have your notifications on so you're ready for the next great trade opportunity. Alright, with that being said, I'm Alexander, the Day Trading Champ, and I'll see you guys on the next video.